multiple offers, dual agency. We talked about backup offers.
That's specifically the email question.
Yeah.
So we've got, I've got the times written down here again that we're doing, 7:30, 9:28. Yeah, I just wrote it just so I just reload it.
Okay.
That way if Mark wants to see it, I'll have the timer going here. So,
You guys ready?
la la la.
Oh, this is sounding really good.
Oh yeah.
Bow, bow. All right, you guys ready?
Oh yeah.
Here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms. Which, by the way, you're still growing, aren't you?
Still growing and still planning to grow.
Excellent.
10x in 5 years if all goes well.
Okay. And the other Mark in the house, Mark Cooper of HL Commercial. Our phone number is 888-912-1190. Remember that number because you're going to use it to answer the trivia questions for 3 tanning certificates given away during this show. Those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon, which is having a big grand opening right after the show, actually. In 2 locations in San Francisco and 1 in Marin. Again, today's trivia theme is random trivia. Now, Mark Cooper, you got some good stuff to talk about.
Oh, we do. Boy, well, there's some crazy activity here in Marin County. And,
on the commercial side, right?
On the commercial side, sure. I've got a office building not far from here. I mentioned that to you last week. And, man, one day I had 5 tours coming through, multiple interested parties, inspections going on, craziness. And I had a client ask me, should I put in a backup offer if the property is already in escrow? And we don't see that as much in commercial. In residential happens all the time because they're always generating multiple offer situations. But this property is actually another one I got cooking is up in Petaluma. An offer came in. There's not much inventory up there, and residential agent said, "Hey, should I put in a backup offer?"
Okay, well,
so that was the question about backup offer.
That's actually what your email question came in was. When should a seller accept a backup offer?
Yeah, so when should a seller encourage or accept a backup offer? And it's funny because I spoke to my broker about that, and I said, well, what do you want to do? And he goes, it's really nice to keep that backup offer in the back pocket. And in this interesting situation, the backup offer is stronger than the offer that we're in escrow on. So my seller said, wow, that backup offer looks pretty good. How do we push the buyer out?
That's always a scary thing, because a lot of times your first offer is your best one, but also how many people really want to put in a backup offer? If they find out, you're going to be in second position on the offer, a lot of times they just back off and they just, no, just wait to see if it actually comes through because that helps push the offer forward on the first one.
Yeah, and what's interesting is that, Mark, you're talking commercial real estate, but that, really it applies in residential too, because we're, I participate in buying, fixing, and flipping residential real estate with some of my clients, and we've got one on the market right now, and we're in a great market right now, multiple offers, and we took what we thought was the strongest offer, but was actually less than what's now the backup offer. And so when you say strong offer, you don't necessarily mean the highest priced offer. There's usually what are some of the other factors that make a strong offer? So
here's what we're seeing when I write up an offer on behalf of the client. We're looking at inspection, we're looking at appraisal, and loan, and so all of those have deadlines and timelines. And so oftentimes someone will come in and say, it's pretty common, 30-day inspection, 45 days for the loan, 60-day close, something to that effect. Now, if that deal is to fall out, maybe they ask for credit, seller says, no, I'm not giving you credit. Maybe they do an inspection and they find something they don't like, or maybe there's a little trouble with the financing there. The buyer can come back and ask for a credit, seller says no, and then you're at a standoff. That's where the notice to perform comes into play. But if it's an amazing deal, they might actually be looking for some private money rather than canceling the transaction if they can't get their loan. But the situation here was we had the first offer comes in that was okay, a little less than the asking price, and it had a long-term loan, SBA loan, which is typically 10% down for an owner-occupant, and maybe a 90-day close on something like that. So what happened in this situation here is they're doing their inspections. We're 90 days out from the close. I get a call from somebody that wants to see a property that's represented by an agent. By the way, we're going to talk about dual agency a little later. So an agent goes, I've got a real hot buyer. He really wants to see this property. And I said, well, I'm happy to show it. We're in escrow. We're doing our inspections. And they liked what they saw. And then the question of the backup offer came up. I encouraged the backup offer. And what we're doing now is we've got about 4 more days on inspections. We'll see how those inspections go, and then we'll respond to that backup offer accordingly. But right now, we're looking at that. And I think it's nice to have my seller in the driver's seat as to, do they want to accept this offer? Do they have to accept the offer? Can they wait? And it almost looks like in this situation, it might be prudent to wait and see what happens.
Yeah, doesn't that usually push the original offer to close because they know there's a strong backup offer?
Right, and we mentioned sometimes the backup offers could come in stronger than the first one, especially if, looking at a 90-day with financing versus cash or a quick close. And sometimes it's not the price that is preferable, it's the quick close. I sell commercial condos. Not only do they have mortgages and taxes coming due soon, a lot of them have HOA fees. So an HOA fee could be $500 a month or more. And if you're looking at a 90-day close, which might not close at all, you're carrying $1,500 that you don't need to if you can close quick and get the deal done. So the answer about backups offers is there's no real answer. It's a case-by-case basis. But it is something that you can do with commercial and residential properties, and there is a CAR form that we use for backup offers as well.
And so, is there anything that someone can do if they're on the buyer's side and they're in a backup position? Is there something they should do to make their offer extra compelling on the backup side? And are there things they shouldn't do?
Well, that's a great question. I would say, first of all, a buyer that is red hot for a property that's in escrow, if I really wanted to buy the property, I would probably do some inspections as soon as possible, and then get in a solid offer that has limited financing or cash and a quick close. Because when that first deal falls out, you want to be right there and say, I'm willing to buy the property for this price, practically as is, and I can close on such and such date, because the seller is then going to be ready to deal with a real buyer. And the more homework you can do, especially have some financing lined up, if you need financing, that's the way to go. Is just get all your ducks in a row.
Maybe the second half of the question you can answer after we come back from this commercial break.
Okay. All right. Here we go. We're going to cut to our first commercial break here. Before we do, want to make a quick mention here for a getaway to the wine country is the perfect way to relax this winter. The Glen Ellen Oyster Grill and Martini Bar is the perfect place for a romantic meal or party with friends and family. Got to check them out. They have some secret cottages. GlenEllenInn.com. All right, first trivia question. Who gave the state of Florida its name? All right, that's our question.
I got this one.
Oh, really? Okay, call 888-912-1190. Be the first one to answer the question, and you'll win the tanning certificates, good for 3 tanning services. 888-912-1190. Don't touch that dial. The best of investing. We'll be right back.
All right. Yeah, it's so tempting to talk about my deals right now. Like what's right on my mind, but I'm like, well, shit, we're still in escrow. We've got this thing. People asking for credit. We don't. The first offer doesn't know the backup offer's in.
Ooh. So I'll come around.
Don't usually.
Well, I mean, you don't.
You don't have to do it.
I would think if we were to accept a backup offer, and I would talk to my broker about that we should tell them about it. I mean, I just got the backup offer yesterday. We haven't decided how we want to respond to it yet, and there is no legal contract between seller and backup offerer.
Right. Correct.
Right? And so I don't think there's any reason to disclose something that you don't have an agreement on. Right?
No, but the backup offer knows they're in backup position.
Oh, absolutely. They use the backup form, right?
No, just tell everyone they're in first position.
No. I was tempted to counter the backup and say,
I do that when I sell loans all the time. Oh, you're going to get a first position loan.
Yeah, right. You're
really an eighth, but
eighth first, all the same. Yeah. We're number 8.
I'll come back and ask that question if you have an answer for it. Well, like what have you seen backup offers do that you would not do, or recommendations for them to avoid?
Right. I think a backup offer should have. I mean, I've kind of mentioned it before. I touched on it. Little to no financing, quick close, cash, quick close. Because why would? Yeah.
Let's talk about that. Okay. Here we go. Welcome back to the Best of Investing. Edward Brown here with a pair of marks. A pair of Marks. That's a good poker hand, isn't it? Mark Hanf of Pacific Private Money and Mark Cooper of HL Commercial. All right, here's our first trivia question, which Mark Cooper says he knows the answer to. Who gave the state of Florida its name?
Here's what jumped out at me. It was Ponce de Leon.
That's correct.
Oh my
Juan
goodness, wow.
Ponce de Leon.
And finally, after a year on the show, I got one right.
Very good.
Let's celebrate with a martini.
Lanolin in.
That's right.
Okay, so Mark, you want to finish? Mark Hanf, you want to ask your second?
Yeah, well,
question?
we're talking commercial and residential real estate today. Mark Cooper, commercial real estate expert. Mark Hanf, residential real estate and loan expert. And we were talking backup offers and what a backup offer should. And the second part of the question is should not do. Are there any advice you have for someone who's going into a backup position on a commercial purchase offer, what they shouldn't do?
Right. Well, I think I was mentioning that, especially with the industrial and warehouse space, there is little to no inventory in Marin and Sonoma County. Like hardly anything. Nothing for lease, nothing for sale. So when something does come up, there's a lot of activity, and oftentimes they'll quickly get a property into escrow. And I see a lot of SBA deals. I see long-term loan contingencies, and oftentimes someone will get a property in a contract and come back and ask for a credit. They want to pay less, or they discover something during their inspection period. So, 45, 60 days rolls around. They come. It's time to remove the contingencies. Buyer asks for a credit, and the seller's like, "Shoot, I'm already 60 days into this deal. Do I want to start over with a new buyer who's going to lead me down the same way?"
Right.
So my tip on the backup offer would be a cash transaction with a quick close and little to no contingencies, as is, quick close. I mean, I would say
Line up private money loan with Pacific Private Money.
Yeah.
private money is looking really good. 14 to 21 day close. I just get the deal done because the seller does not want to start back at square one and do the little dance all over again. So that's what I would say. If you're going to go into a backup position, you want to be a cash transaction, which can oftentimes trump. Oh, I just said Trump. Trump.
This is not a political show, by the way.
Not at all. I would say a cash deal could trump price of transaction many a time.
Well, that's very true. I've sold a lot of real estate in my career, and many times I'm not taking the highest price. We opted out on a flip. We had an offer, I think, came in at $625, and then another offer came in at $610. But the $610 offer had a pre-qualification letter from First Republic Bank. And so the buyers looked really strong, whereas the other borrowers were looking for kind of like a max financed opportunity, 97-ish% FHA type loan. And so we went with the First Republic qualified.
So you didn't counter on that one?
Well,
I'm just kind of curious.
Well, we did, but they countered back at the same price, and again, because they were willing to close within 21 days, it was very clean, and so we decided to go with it.
They countered with bird in hand.
Yes, they did, exactly. But what's interesting? So we're also lenders too at Pacific Private Money. People come to us for fast, reliable financing when they're either trying to make a an all-cash offer, or maybe their financing glitched, or maybe they've had to extend their purchase escrow and they're trying to buy property, and the seller is telling them, I'm not going to give you any further extensions because I've got a guy in backup position who's willing to pay all cash. And what's funny about that is I hear that a lot, and I have come to find out from time to time that sometimes that's not always true, that there's always that kind of that, we got a guy in backup who's willing to pay all cash, and but they don't actually ever prove that person exists. I wonder if that's a strategy that some people use in real estate to get the buyer to get off his duff and close.
I mean, is that a legal maneuver?
Well, my question would be: are we talking principals? Or are we talking licensed agents who are doing this? And I want to believe that folks that are honest in this business are the ones that are going to last. And sometimes I'll see a guy that lies and he makes some money, and he's like, well, shoot, I could lie and make a bunch of money. This is the perfect career for me. But I had an offer I made on a property, and one of my buyers is all cash full price. If he likes it, all cash full price. So I submitted this offer, and I was very surprised I didn't get a counter. I didn't get any thank you very much. And a week goes by, 2 weeks go by, and I said to the agent, hey, I just want to confirm my offer was presented and when. I didn't see any kind of response. And she said, yes, it was presented the same day it was received. And this is an agent I've done a lot of business with that I trust. So I don't think they're going to say, hey, I presented your offer when they didn't.
Yeah.
And it's almost like there's got to be some honor among thieves here.
Well,
and,
yeah, but
and
also,
honesty.
but legally they have to present all offers, don't they?
Well, yeah, doesn't mean they're doing it.
Well,
Now,
and that's just the case because I have asked clients who have told me, look, we have to close by Friday or they're going to pull the contract. They've already initiated a letter to perform. They say they've got an all-cash in backup position. I said, have you seen that offer? Did you see a copy? Well, no. That's what the seller's agent
they
is
probably
telling us.
wouldn't give you a copy of the competing offer.
Mm.
Yeah, I don't
So-
think you're allowed to.
So that can you show? I don't know here, but I think that
Sure.
that gets back to I've shown that there's a lot of activity. A lot of activity on a property. I mean, the thing on Fifth Avenue, geez, I had 5 showings in one day. I just camped out for the whole day at the property. It was one after, and I had another guy that said, I know this is really tough. His wife wants to see it. I know we got in yesterday. We're very, very interested. His wife wants to see it, and I said, hey, let me see what I can do. I'll pull some strings. I already have another tour scheduled in 2 hours. I said, you know what, come back at 2:30, and I got him into all the units because I was already showing it again. So.
And do you have them show up at the same time?
I try to stagger it by I stagger them by about an hour because invariably, here's what'll happen. The first guy gets there late, and the next guy will get there early. And they show up at the same time.
Got to get them to switch.
Yeah, hey, you can do whatever you can, but you got to stagger it by an hour. And if the first guy's running late, you got to call them right away. Or if not, all of a sudden they're every once in a while I'll do that where I bring a group of 3 buyers through, and they all see each other, and some of these guys know each other.
Yeah.
So it's interesting. But that gets to the dual agency, which I think we'll cover a little later in the program. I was going to say some dual agency stuff.
So we're talking about multiple offers on both commercial and residential real estate in the Bay Area. We're now finally in spring. It stopped raining, and it's just amazing how the activity has picked up. I've got agents who send us a lot of applications for our private money loan products, for our quick close products, and the markets are just on fire again. And it's kind of funny. A few months back, we were trying to figure out, what's 2017 going to look like? Are we peaking out? Is the market slowing down? And there were signs that would have suggested that 2017 might not be that strong a market. But it's interesting with the election of Trump and the strong stock market, consumer sentiment is up. Now we're having another year, and if you're in real estate investing, and if you you and I, Mark, we make our money on the buying and selling and financing of real estate. I mean, I'm thrilled. I'm really excited about this year and how it's shaping up. It looks like we're in for another strong real estate year. For clients of yours, Mark, that are looking to buy and they're frustrated because we're in a multiple offer market in a lot of markets, how do you advise them in terms of how how do you go about acquiring the real estate that they're looking to invest in?
Well, I think that's a great question. I mean, I have some clients that we're loyal to each other. So if you get a good agent that is active in the market where you're seeking property, and the communication is strong, and you're loyal to each other, I found this property, I'd like you to write it up. Hey, here's a great property, I think we should go see it together. It's all about those relationships. And if I see something that's good, I've got one right now, and I was going to say, I'm waiting on one phone call, and if that phone rings, I'm going to run out this door.
All right, well, while you're waiting for that, let's cut to our next commercial break here, all right? Okay. In what year were the first modern Olympic Games held? And you get extra credit if you can name the country in which it was held, okay? That's our trivia question. 888-912-1190. Don't touch that dial. The best of investing will be right back.
Oh, that's a tricky one. I was thinking I could go 3 for 3 here, but
Well, I'm pretty sure it's Greece was the first one.
oh,
And
you picked my.
And they were naked. That's the only other thing I remember about
Well,
that.
when you
But
say
what year?
modern,
I don't think the
Oh,
modern.
modern. Oh, you said
No,
modern.
modern.
Oh,
Greece is
modern.
right. Greece
Oh.
is right, but I don't think of the modern one they were naked.
Yeah, I was going to say Greece because that only makes sense. Like, hey, we're doing it again. Let's start it up in Greece. I was going to go 1910, 1909 or something like that.
1930.
Yeah, well, Hitler was messing around with the Olympics, so that.
Oh yeah.
But then World War
One, they probably put it on the back burner per se. I mean, maybe it was post World War I here, 20s.
You may guess when we come back.
Yeah, we're getting good here.
Yeah. So I came up with that question like right towards the end of the the segment here, so sorry about that.
Yeah.
It was
That's all right.
Yeah, what do you do? I mean, all my questions is all your answers are going to be private money, and all of mine are going to be use me.
That's
Like,
right.
use
That's
me.
right. Yeah. No, well, you made a good. That was a good
So
segue.
Why don't you ask him that question again, if you want, and then
Yes,
we'll
we can.
go back to
We'll
you.
finish it a little more there, and then yeah.
All right. Let me make a couple of quick mentions here and we get back. Here we go. Well, welcome back to the Best of Investing. Edward Brown here, along with Mark Hanf and Mark Cooper. Here was our second trivia question. In what year were the first modern Olympic Games held? Mark, you got
the modern Olympics. So I said 1920.
No, but what was the country?
Greece.
Greece
Okay,
was
do I
correct.
get a chance?
Yes.
I'm gonna go. Got it. You're gonna hold us to that date there. Okay, I'm gonna say 29.
No, it was 1896.
Ooh.
So you guys weren't too far off.
Yeah, right.
Not
Okay.
too bad. And
Exactly.
as we pointed out, they were not naked in this one.
No, that was the original
The
Olympics
original
way
one,
back in
to
the
make sure that women didn't
back in the
get
odds.
sneak in. Yeah, so there you go. So I want to make a couple quick mentions here. First of all, what do you do if your child cannot hear or speak? Where do you go? The Weingarten Children's Center provides innovative and effective therapy and education services to children, and they're having an awesome golf tournament Monday, April 17th at the Peninsula Golf and Country Club in San Mateo with lunch, golf, and dinner included. Check them out at listenspeaklearn.org. All right, and then also one more quick mention here for my friends at High Tech Screen and Shades. I just had my screens put in, and they're the kind that they're retractable, and then you bring them together. They're awesome. Check them out. And call Rick at High Tech Screens and Shades. Okay, Mark.
So I had asked him. We ran out of time, and I had asked Mark Cooper a question about when we were talking about multiple offers, and we're talking about how the real estate market, both on the commercial side and the residential side for buyers, is tight. And so, how are you working with clients that are looking to acquire commercial property, but they're competing in a tight market?
Well, I think one thing I said is where you are, get an agent that's experienced in that and specializes in that area. So I would say I've probably sold 20 warehouses in the last couple of years. And with the market being tight, I have relationships with the people that bought those warehouses. And there's a good opportunity there. In fact, I sold one warehouse I sold twice last year. I sold it to one guy. He held it for a couple months and turned it around and sold it again for a
I'm glad
profit.
you made that clear because you
Yeah.
didn't sell it to two different people.
No,
at the
I
same
love
time.
that. That's my next plan. They can really make a career out of that.
Yeah.
But with the market being so tight, I go back to some of my off-market properties, and I have relationships with those people and say, I'd like to bring a client by. Would you look at an offer if he wants to buy your property? And so what if warehouse is $320 a foot? If there's no inventory, doesn't matter, right? So what we're doing is we're pursuing off-market properties with the relationships that we've built over the years. And Peter Gettner and I sell the majority of the warehouses in Marin County. Little plug for my partner there. And so we've got relationships, and I think that that's really important. You want to have a relationship that one has experience in the market and the asset class that you're looking for. And there may be somebody, you want to buy apartment buildings, talk to that specialist because he's sold a lot of them and he's got relationships, and that might be a way to go. And a lot of people are afraid of getting an agent on board, but it's like, hey, a buyer and a tenant, you don't have to pay your agent. It's paid on the listing side. And it's not just finding the property. Finding the property is the tip of the iceberg.
Yeah.
Making an offer under the terms and conditions that you're comfortable with, making sure the contracts reflect that and there's nothing else sandwiched in there, no surprises. That's what we specialize in. So if anybody's looking for a Marin County commercial property, I'm the guy, Mark Cooper, HL Commercial, 415-608-1036.
Well, the market's so hot, and especially in Marin, I would hope that people would want to call you. Good investments out here.
Well, and Mark, you're absolutely 100% correct. If you're a buyer, you need to have a good agent representing you to help you find opportunities in this tight market. I'm going to offer up another suggestion for people who are looking to acquire property in this tight market on the financing side. So unless you have a mattress full of cash or a rich uncle, and he's willing to bankroll you on your acquisition of property so you can run around and make these all-cash offers, I have a suggestion for you on making a like all-cash offer. Now, you have to work closely with your agent representative on how you craft the contracts that you would make using a private money loan. But one of the beauties of using private money, sometimes called hard money, but at Pacific Private Money, we make a lot of loans to people who want to make aggressive offers on a real estate purchase, like an all-cash offer. And when I say like an all-cash, there basically is no financing contingency, number one. And number two, you can have a shortened time period in the escrow. We've financed purchase transactions where the buyer went in there with a 10-day close, like all cash. Now, we've also been involved in transactions where the buyer instructed their agent to write all cash in the offer. And again, I'm not going to comment on the morality of that, but they had the intention to come to a company like Pacific Private Money and slip in there last minute with a basically non-contingent hard money loan. I will say that sometimes the selling agent or sometimes even the escrow company will get a little peeved when they believe that it's a cash transaction. They find out, well, there's actually going to be financing in here, but it's going to be easy, low documentation financing that we provide. But anyway, just check with your realtor on that. But consider using private money, and private money right now in the Bay Area is priced. It's priced a lot more competitively today than it was a year ago, last year, and certainly much more competitively than it was 2 or 3 or 5 years ago. So if it's been a while since you've investigated the cost of private financing, a private money loan, a hard money loan, whatever you want to call it, it's all the same thing, from a company like Pacific Private Money, you need to give us a call, because I will tell you that rates continue to drop. Even though prime has now gone up twice in the last 6 months, private money real estate loan rates in the Bay Area are as competitive today as ever. There are new lenders that are coming in, and we've had to adjust accordingly. Rates are coming down, fees are coming down. They're still, they're still subjective. They're still holistic. It depends on, what's the loan to value, how much financing do you need, how fast do you need it, what's the condition of the collateral, what's the capacity and the credit of the borrower. There's all these types of things we kind of factor in there. But all that being said, a year ago our average loan rate was still pretty close to 10%, and today our average loan rate's closer to 9%. A year ago we were still getting 3 points on most deals, 2 to 3 points. Now it's 1 to 2 points. So and no prepayment penalty is very common, whereas a year or two ago, oftentimes you'd be quoted, well, there's a 6-month minimum interest guarantee for our money. Well, guess what? Your money isn't any greener than anybody else's, so I'll go with the guy that has no prepayment penalty. At Pacific Private Money, all of our loans have no prepayment penalty, so if you want to pay us back in 6 days, 6 weeks, 6 months, that's great. Just not 6 years, because we like to do short-term loans of around a year to 18 months. So for more information about fast, friendly financing from Pacific Private Money, well, go to our website, pacificprivatemoney.com.
Okay, and when we come back, I want to ask you an email question and find out a deal of the week.
Nice.
All right. Here's our next trivia question.
You were on a roll there.
Frankenmuth, which I don't know how you spell that one. Okay, a U.S. city nicknamed Little Bavaria is located in what state? We're talking United States.
Say the name again.
Frankenmuth. Frankenmuth. M-U-T-H. Frankenmuth.
Probably with a little umlaut over the U or something.
Something like
Fancy
that.
spelling.
Yeah. My computer didn't do that. All right. 888-912-1190. Don't touch that dial. The best of investing. Still going to be right back.
Okay, I thought we were 7:40. Did we go 11 seconds?
No, we're 8:40.
We're 8:40. I'm looking at yours.
Oh,
I had it.
That's an 8
okay,
hour.
okay. Okay, that threw us off a little bit.
What happens is when a commercial drops off and another one I have to kind of put in. And
Right.
So we still have
each week
919 for the
You
next
still
one.
have 919.
Yeah, I think that it's important here to say you can tell someone it's a cash deal, but is an appraisal or loan a contingency of the sale? Okay, so
I didn't say that. That's actually important
Right,
because
because
we
it
don't
is
require
does the
appraisal.
contract say I've got an appraisal or a loan contingency?
and we can talk a little bit about that too. Like, we got material, don't worry.
Yeah, no, we're good. Oh, I don't know how to deal in the week. I'm trying to think of what I know. Rick and Mike have been crazy busy. I don't keep a handle on it.
Just kind of go with the email and
We'll go through there.
okay, right?
Yep.
Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Hanf and Mark Cooper. Trivia question: Frankenmuth, M-U-T-H, a U.S. city nicknamed Little Bavaria, is located in what state? Now you have 50 choices here.
Missouri,
Pennsylvania.
No, Michigan.
the other M state.
The other M state, that's right. So, Mark, we got an email. Let's try to condense this here for you. It says, my 2 sons and my daughter are unable to invest their own money in your fund. You'll have to explain what that is, okay? As they are not accredited investors. However, I am. Could I create an irrevocable family trust? I wonder if they have to do that. You have to tell us if they have to do that. With my children as members and invest in your fund through the trust. My net worth is over $5 million, which is threshold for entities like family trusts.
Interesting. So at Pacific Private Money, we have a mortgage pool fund that we use to make our real estate loans. And a mortgage pool fund is like a mutual fund of sorts. It's like a mutual fund of mortgage secured notes. And so we take investment capital from private individuals all over the Bay Area, in fact, all over California. People invest in our fund. The minimum investment is $50,000, and you must be accredited under the definition of the government, the SEC, in order to invest in our fund. And the definition of what makes a person an accredited investor is simply that you have a net worth of $1 million or higher, exclusive of the equity of your home. I know a lot of people in the Bay Area, they have a net worth of $1 million or greater, largely due to the equity in their home. But in this case, you cannot count that. So obviously, their children are not accredited. There's a couple of ways that you can invest on behalf of your children. And one way certainly is to create an irrevocable trust. Whether or not that's the right thing for you to do is really going to be up to your tax advisor, your retirement advisor. Hopefully you have a good attorney that you use for your estate planning and other documentation. You want to confide with them because, again, you want to make sure this is the right way for you to go. But they did mention in the letter that they had a net worth of over $5 million. Why is that relevant? Well, to invest in a mortgage pool fund like Pacific Private Money, you need to be, number one, accredited if you're an individual. But if you're investing through your trust, the trust has to have a value or net worth of $5 million or more. And again, I know this kind of gets down into the weeds, and for more information, you can always contact us. But I have offered other options to people who have inquired, because we do have several clients who have invested on behalf of their children. And so what they've done is they've simply opened up another account, a second or third account in their name. They're the accredited investor, and they will, the downside is they have to report the interest income on their taxes, but typically, unless they're in such a high tax bracket that this doesn't make sense to them. But
wait a minute, could they report it as nominee interest?
I don't know. Again, that's something that I'm not.
It's really kind of collecting on behalf of other people.
Yeah, I don't handle that. The CPA side of it, you would have to take care of yourself. But we've had people open up additional accounts on behalf of their brother, sister, mother, children, whoever that person is who wasn't accredited but has money that they want to invest. So again, there's a number of ways you can get creative with this. Check with your tax planner, your CPA, your tax attorney, and they can give you advice on that. But we're really super excited about how well the Pacific Private Money Fund has performed. It's been in existence for 4 years now, and we've been producing yields right around 8%. We were a little above 8% in 2014 and 2015. In 2016, we were at 7.8%. This year, I'm predicting we're going to be somewhere between 7.5% and 8%. depending on some of the payoffs that we have coming in that have some additional fees for the fund. But we, as we talked about last segment, private money real estate rates are trending down, and so we're meeting that marketplace pressure, and as a result, the yields in our fund have been coming down a little bit. But I got to tell you, given what you're going to get in savings rates and money market rates, and the fact that I'm not really sure if we're going to see another bull run anytime soon in the stock market, a solid 7.5%-ish or 7% plus yield with safety and security features and collateral behind it. Our number one goal at Pacific Private Money is capital preservation. So we are very, very bullish about the strength and safety of that investment in terms of capital preservation, and the fact that you can still earn a strong 7+% yield on that invested capital. I just think it's the best kept secret in investing today, investing in mortgage pool funds. So for more information, go to our website, pacificprivatemoney.com, or give us a call, 415-883-2150, and we've got some one-page collateral, we've got some 10-page collateral, we've got an executive summary, we've got all kinds of very easy to read, easy to understand promotional material on the Pacific Private Money Fund and how it works.
Do you have any kind of deal of the week or any exciting deals you're
You know,
working on?
it's funny. It's not so much the deal of the week is that the phones have been ringing off the hook, and my agents are just going nuts, and it's just so great. It's we went through February where we were all looking at each other, going, "Oh my God, what happened? Did something happen in the marketplace and someone forgot to tell us?" I mean,
It rained.
Right. There was nothing going on, and everybody that I've talked to, whether you're a real estate agent or you're a lender, I mean, there was nothing happening in our little universe in February, and as a result, even early March, we just didn't have that many closings. And now, it's funny, the pendulum swings in our office. This pendulum swings one of two ways. We have too many deals and not enough cash, or too much cash and not enough deals. It's never, just right. And so we had way more investors calling us in February, going, "Hey, I'm not seeing anything from you guys. What do you have to invest in, or should I be, put some more money in your fund?" And then this week, it's all about sending out trustee investment opportunities, since our fund is now fully lent out. We've lent out all the money in our fund, and now we're going to our stable of high net worth individuals who like to invest themselves in individual notes, and finding a lot of those guys have got tired of sitting on cash and invested in other things.
But you're still obviously your fund has room to grow. So you're still
the fund has a lot of room to grow. So yeah, so we're at $25 million total assets under management in the Pacific Private Money Fund right now. It's the PPM, the Private Placement Memorandum, or offering circular, as some people refer to it as. It's written for a $50 million capital raise, but I know already that we're probably going to double that to $100 million, because we're on pace to do about $100 million worth of fundings this year, and so we can definitely use more of your capital. So if you're interested in a 7% yield secured by real estate, and I might add, the weighted average loan to value of loans in our portfolio, we've got about 80 loans in our portfolio right now, is under 60% loan to value. So it's a very conservative, very well secured fund. So if you're nervous about real estate prices maybe taking a dip sometime in the near future, I don't see it right now in the 24-month horizon, but that doesn't mean it can't or won't happen. But we believe that we are well positioned to weather a correction or slight downturn in the real estate market.
And the one or two foreclosures you actually had in the fund didn't suffer, right?
Well, we've got one foreclosure right now that is set to close actually next week, and if all goes well, I'm still waiting for the final estimated closing statement on that, but the fund's actually going to make a profit, a nice little profit for that, so that'll be a nice yield boost for the fund when that comes in. So far so good. Yeah, we've got very, very few foreclosures historically, and we're making a nice little profit on this one right now.
Excellent. Okay. When we come back, we've got another 5-minute segment, and we'll close up with some closing comments, all right? And a few more details. Doesn't touch that done. The best investing is going to be right back.
All right. A few more details. Some secrets.
Let's go back to the contract.
Oh, yeah,
Is
yeah.
it a contingency of the contract for the appraisal
Yes.
or the loan approval?
Good, that's a good way to end it.
Yeah, I had a guy that the appraisal was a contingency, and the bank, the banks are so funny. They don't want to release the appraisal until you're ready to sign at close. Because if the appraisal's out, you can chop the loan.
Yep.
Yep.
Well, but in
That's right.
theory, I mean, another bank can't use that appraisal. They have to order their own, but however long that takes.
Right.
Yeah, you're right.
Right, and so I said, hey, the appraisal is a contingency of our contract. We need that to release and move forward.
Yeah.
And then the bank's like, plays, oh, you're the agent. I need something in writing from the borrower to
Okay.
release the appraisal. I get all this kind of stuff, but
Say, okay,
yeah.
ready? Here we go.
Ready.
Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and Mark Cooper. And Mark Cooper, you had a very quick question for Mark.
Well, we were talking about those. Is it a cash deal when it's a private money deal? And a comment I actually had was, does the purchase contract say that a loan or appraisal is the contingency of the purchase? So can they get out of the deal if they don't have an appraisal or they don't get the loan? So I'd be very careful when the contract's written. And is that something that you're putting into purchase contracts, appraisal and loan contingencies, Mark?
Right. Well, so I'm not actually putting them into the contract because we are the people, we're the company people go to when they want a reliable, fast closing loan, so they can make a low or no contingent offer. But your question brings up actually a point I didn't make, I forgot to make, which is most companies like ours, like Pacific Private Money, most private lenders don't require an appraisal on a purchase transaction. On refinances, mostly we do because we want to really verify the value. But on a purchase, on an arm's length purchase transaction that on a listed property, we generally presume after some minimal due diligence that the parties know what they're doing and that it's a fair market price. So we do not require an appraisal. So that part of it also helps in terms of making a very low or no contingent offer.
Right, absolutely. So I'm an agent. My buyer is using private money, and I write up the offer as if it was a cash transaction, which would be, this is how much I'm putting down, this is how much we're having at close, no appraisal contingency, no financing contingency. All I'm going to do is my inspections. Once those are good, we're going to close this deal. I'm definitely buying it.
Absolutely, and again, every private lender company operates differently. Some may want an appraisal, some may want certain inspections, but because in private money we tend not to go above 70% loan to purchase price, I know at Pacific Private Money we don't get caught up in that. We again presume that the buyer who's putting at least 30% down doesn't want to make a stupid acquisition, and he's probably represented by a smart, reputable agent like yourself, Mark. So, if it's prudent to get an inspection, they will, or maybe inspections already exist. And again, the appraisal part of it, you and I know the appraisal, business is a racket. No offense to appraisers because they're hardworking, but we know it's kind of a racket. And right now, appraisal time periods are ridiculously long. So, having an appraisal contingency in a real estate contract is problematic in many situations, both in commercial and residential. Don't you find that to be true?
Yeah, I do, and the other thing that comes up there is, well, what happens if it doesn't appraise? And if it's an appraisal contingency doesn't appraise, the buyer can come back and ask for a credit or cancel the deal and say, hey, I had an appraisal contingency, didn't appraise, or it appraised under. I think when you were saying it's a racket, I think 99% of all appraisals I've ever seen come back at the contract price.
And when it doesn't,
Fancy that.
Or above.
And when it doesn't, that's when Astro from the Jetsons says, "Ruh-roh."
Was that Scooby-Doo?
No, that was Astro.
Was that Astro?
"Ruh-roh. Hey, George. Yeah, I guess a little bit of Scooby-Doo.
I think it was
could have been the same.
Hanna-Barbera was the same voice for.
Exactly.
Yeah.
So here's a trivia question: who was the voice of Scooby-Doo?
Shaggy. No, I don't know.
It was the guy that did America's Top 40, and I just
Casey
spaced
Kasem.
out Casey Kasem.
Oh,
That's
that's
right.
right. Okay. Hey guys, we got to cut out for today. That was fun. All right, here's our thoughts for the day. You guys remember the tennis player Vitas Gerulaitis? Kind of names from the past. He said, "Nobody beats Vitas Gerulaitis 17 times in a row," and this was after beating Jimmy Connors after 16 consecutive losses to him.
Nice.
Yeah, I guess I could say that too. Huh? And Muhammad Ali said, I don't remember him saying this. This is a good one. He said, "I should be a postage stamp. That's the only way I'll ever get licked." Good old Muhammad Ali.
Absolutely.
All right. So again, Mark, give out your phone number. Mark,
So PacificPrivateMoney.com, 415-883-2150 for more information about mortgage pool fund investing or a fast non-contingent loan.
and Mark Cooper.
Mark Cooper, HL Commercial Leasing and Investment Sales here in Marin County. My cell is 415-608-1036. My email, mark, M-A-R-K, @hlcre.com.
Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
Okay, another great show in the can.
Another great. Yeah, those
So, all right,
great.
so I had a question or comment here.
Yes.